Hello, hello, hello. Can you hear me?
Yes, sir. Yes, sir. Good evening, sir. Compliment, sir.
Yeah. Mr. Go Wide, how you doing, boss? You good?
So
Where have
good
you
to hear
been?
your voice.
Yeah, I hear that you're making all the money now.
I already hear that, sir.
uh, they are giving me reports. They're giving me reports that you're now a big money maker. Yeah, I'm good.
Sir, I'm still trying to see you. I'm still trying to
You are
see you.
still trying.
Yes, sir. I'm still trying. I'm still scrolling.
Well. I'm glad you are doing well. That is the goal. We all want to be financially independent and free. So yes, so well done, well done. So I'm sure you're going to. Are you in a place whereby you can, use your computer perhaps to share some of your insights with us, or some of your last trades or whatever, just to give us some sort of um, you know um, idea of what you look out for and why and all of that kind of stuff. Are you able to use your computer today? Uh, can you hear me? Can you hear me or not?
Yes, sir. I'm still at work. I'm still at work, sir. I actually joined. I'm still at the office.
Oh, okay. All right.
So my personal PC is not with me. I'm using my phone.
All right. No problem. No problem. I think more people are joining us. For your information, we are actually streaming live as well. So I mean live on YouTube. So you can also search for FXP Finder on YouTube. You go to my channel and I'm able to watch this video live as well, and obviously be able to catch up later on as well. Okay. So there won't be, you guys asking me for recording and all of that. Just go to my channel and watch it there. All right.
Yes, sir. Please,
So
can you drop the link of your channel so that we could share to some other people?
well. Okay, I'll do that. I'll do that. But it's just search for FXP Finder. You would find me um, on YouTube. I'm sure you know what my logo looks like. So once you search FXP Finder, you see my logo. Well, I'll try and drop the link anyway. But to be honest, it's quite simple to search. All right. Fridaus, how you doing? Mary, how you doing, Mary? How's it going?
Good evening.
Hey, sir.
Good evening.
Uh,
Yes,
yes.
boss.
Happy New Year to everybody.
Yeah, same to you.
Happy New Year.
Thank you.
Yeah, so I hope you guys finished the year very strong and obviously starting the year even stronger. So how's trading so far for you guys? How's it so far?
Personally, I'm still doing the game.
Okay.
Yeah.
All right. How about Fridaus? How's it going for you? Are you understanding what is going on with all this craziness on the markets now, or you're still not understanding what is going on?
I'm still trying to figure out my age actually.
No, I didn't quite catch what you
1 minute,
said.
I understand. I said 1 minute, I understand what is going on in the market. The next minute, I am completely lost.
Okay, I understand that. Okay, now
Can you
tell
hear me?
me, yeah, I can hear you. Tell me something. What is the greatest challenge for you? Because because what you just said now, you said you know what? If I am trading, I kind of understand, and then the next minute you get confused again. So what usually confuses you when you look at the market?
Yeah, so there is something I'm having issue with. When to understand, when to realize that the market, how would I, when to realize that the I'm actually right. Well, maybe when I take a look, like maybe two, three times, when to realize that maybe I'm doing the right thing or I'm doing the wrong thing. You know, I may think I'm doing the right thing while taking stop loss back to back and still think maybe I'm doing the right thing, but I'm actually doing the wrong thing. So when I'm having issue with realizing when I'm actually wrong and how to figure out where I'm wrong.
Okay. All right.
If you get me.
Yeah, I totally understand what you mean. So now, when you say, because you're saying you're wrong because you're having back-to-back losses, is that that's what you mean by you're wrong, right?
Yes.
Right. But do you know that sometimes you can, okay, let me put it this way. So let's say, for example, you have a directional bias, for example, and then you're trying to buy, and then you are, you probably had, back-to-back losses in the direction that you're trying to buy. I'll give you an example. Let's say this gold, chart. Can everybody see my chart on gold, H1?
Yes, I can see it.
Okay, now, so let's say, for example, you're trying to, let's say you have a directional bias that, hey, my, gold is bullish, and then you're trying to get into the act, and then for some reason you're having back-to-back losses because of your entry, your entries basically, and then not even entry, it might be your, where you have your stop loss or what your account can take. All right. So which one is it? Is it because you do not understand directional bias, or you do not understand entry and exits? Because that is pretty much what constitutes a trade. You need to understand your directional bias and then entries and then potential exits. So which one is the issue?
I think my risk tolerance. Let's say for when you talk about us sharing our account balance or funding account, we talk like we should fund $100 our risk $100 per trade and share it into $30 and stuff like that. But
Yes.
majority, I don't know about others, but for me, I don't think it is quite possible because my risk tolerance at the moment is maybe $2 per trade.
Yeah,
Maybe
well,
I
that's
fund $20 and then to
okay.
be risking some most of the trades you show us, I'm always
Yes.
noticing the stop loss, like the stop loss requires at least $50 minimum.
Okay. Now,
So
okay.
I'm always trying to find an edge on trade with something like maybe $2 or $3.
Okay. Number one, if that is the case, then you should stay away from gold.
I
All
don't
right.
trade good actually. I don't.
You should. Okay. So what do you trade? What type of assets do you trade?
Um, I trade V10, just 4 pairs actually. Four pairs. V10, V25, V75X, and let me check. I think V100 for the last one. Let me check. Oh, okay. It is actually five. V10,
Okay.
V75, V25, V75, and V100S. Because those are
Okay.
actually to me, the um let me say the minimal volatility,
Which
unlike
one?
some other pairs that requires large amount of money. Like
Yes.
V10,
Out
I
of
noticed they don't require like that large.
out of all
They
these
don't
five that you
require
mentioned,
large amount of funds.
yeah, hold on. Out of all these five that you
Okay,
mentioned now, which one do you think is the most cheapest to trade?
and that's V75.
V75,
Yeah, V75 is the cheapest.
V75 1S, right?
V75S. Yes.
All right.
Those
Now,
two.
all right. My advice to you is that you should stick to either one or two. In fact, I would say just stick to one for now. Don't even bother looking at other ones, whether they are, well, you can look at it. Okay, perhaps maybe you want to, just follow the trend, or you want to pretty much test your strategy and all of that. But my advice to you is that if you want to really trade, only trade one of those, V75 or V75 1S. Now, the reason is because it will help you in terms of one, being accountable to say, okay, this week I've traded this thing once or twice, and then a lot or in a or whatever the case may be. So let me just
I know as in
mute,
this even farm, this is
one second. Sorry, I had to mute the guy that was making a noise over there. So I'll allow you to unmute yourself now, Fridaus. So just in case you want to speak. All right. So so my advice, like I said, is you should stick to one. All right. And the reason is because you'll be able to track your records well. And if you lose a particular, a particular pair or a particular trade, then you would know how much you've lost and exact how much you've lost and how you can recover. Now, most times, a lot of people will say, oh, they want to revenge trade. I'm not saying you should revenge trade. No, that's not what I'm saying. I'm saying that you will be able to have a proper documentation of what has happened, all right, and how you can continue to trade. Because for you to take a trade on a particular pair, usually you are in around your POI, so to speak. All right. So just because the market now had a little dip or a little rally, let's say for example you're trying to buy and then had a little dip and then took you out, that doesn't mean that it's not going to continue going in that direction unless there's a significant amount of movement in the market. Does that make sense? Fridaus, request. I don't need to record, guys. It's already on YouTube, so don't worry about that. Fridaus, you can unmute your microphone and then you can speak to me. As we speak, this session is on YouTube, so I would not really need to record it in the cloud. All right. You guys can search for my name on YouTube, FX Refiner, and be able to follow through what we are doing, now and later. All right. So that is that one. So do you understand what I'm trying to say, Fridaus? Yeah.
Yes, I do.
All right. So it took me a while for me to also understand what I'm just trying to say to you. That you see, you know what? The more you look at, the more pairs you look at, the more confusing everything will be for you. Because by the time you are trading, let's say, for example, you're trading V25, for example, and then you have a losing trade, and then you jump into V100, and then you want to look at that. Most times, you probably lose. All right? Most times, you probably lose. What you should do is try to reevaluate one particular pair or maximum two. In fact, I look at trading now like as if you are in a marriage, okay, or in a relationship or something. Just stick to one. All right. You can look at others, but when you are placing your trade, just place your trade on one. That's what I'm just trying to say. You can, for example, if you look at my watch list here, I've got a few pairs that I have here, but I don't trade all of them. I just look at them. All right. But I trade one or max two of them. That's it. Okay, I trade a lot of gold. So yes, gold is pretty much one of the pairs that I trade. And then perhaps if I'm on the river, I do B25. And then if I'm on World Trade, I'm sure. Do people know about? Do you guys know about World Trade? Yeah. Let me see. Let me pause that. So when I'm doing World
Yes.
Trade, I pretty much trade on FX volume 60 or thereabouts. Yeah. So those are the kind of things that I do. So I just look at one or two pairs and I'm done. Okay. All those three, four, five things would collapse your account in no time. Hope that makes sense. Yeah. So now that is part one. Do anybody wants to share their current situation right now in terms of how they're doing? I have Sparkles in the room. I'm not sure who Jace is. Jace, could you please identify yourself? You can unmute your microphone and speak to us. That is, if you want to share. Yes, hi. Can you hear me? Can you hear me? No?
Are you talking to me? What do you mean, sir?
Yes. I was asking, I saw a name called Jace. I wanted you to please identify yourself. So that's why I'm asking.
Okay,
All right.
sorry, it's easy. I don't know how my Zoom name changed. It's easy. I don't know if you know
Oh,
easy.
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 Oh, easy. How are you?
Yes. I'm doing great, sir. How is everything
Okay.
going?
Yeah, not bad. We thank God. So, how's trading so far for you during the obviously the December period and obviously the start of the year? How's it going for you?
Um, I'm just doing much of studying now, though, because that's what I'm just doing now. More of studying and trying to do some offline businesses to generate capital. So that's what I've been doing.
All right. All right.
Yes.
Somebody says they cannot hear me anymore. Can you still hear me? Or not, Firdaus? If you cannot hear me, then probably log out and then log back in. Um, I'm currently
Yeah,
speaking to you. You can hear me, so I'm
I
sure
actually can hear you now.
others can hear me too. Can you hear me?
Thank
Yeah.
you. Yeah, I can hear you now.
Okay,
Thank
great.
you.
All right. So now, let us talk about um, what really moves the market. Okay. What do I mean by this? When you should begin to trade the market, do everybody know what the market structure is? Talking about your order flow, to know if you are bullish or bearish, because the market only do three things really, either goes up or down or sideways. Okay. Can you categorically tell me, or can you be sure of you looking at a chart and saying, you know what, we are bullish or we are bearish or we are going sideways, you're staying on the sideline. That is the first thing you need to know. So is there anybody in this room that do not know how to find the direction of the market? Anyone? If you do not know how to find the direction of the market, then please speak up. Can you hear me? Oh, okay. Hold on a minute. Did somebody raise up your hand? No. Okay. All right. So I've got another person called Jay. I'm not sure who that is. Jay, could you please identify yourself as well? Um, and then I can show you some few things. Can you guys hear me?
I can hear you.
Okay.
I can hear you.
Oh, you can hear me. Okay. I was just trying to ensure that
Yeah, you too.
everybody can
Pleasure.
pretty much speak to me, and I can, if you want to speak, okay, and your microphone is not, you're not able to unmute it, then please raise up your hands or something, then I'll know that you want to speak. All right. All right. So now, first thing first, when we are looking at any chart, you know, first thing you want to put at the back of your mind is that this may sound a bit cliche or a little bit confusing, but trust me, ask yourself one question. Or let me don't say ask yourself a question. Let the market tell you that it is the chart is either to convince you that you should trade. First of all, always have in the back of your mind that you do not want to trade. All right. Now, what do I mean by this? Put it in the back of your mind that the chart must convince you 100% that it is ripe and it is ready for you to harvest. Okay, you must have some set of rules that you follow, before you want to you want to enter, any market. Okay, there are a lot of different entry models that are there. However, there are some few that we have, tried and tested and has been making money that I would probably share with you guys. And then I'm going to show you something for people that already know how to trade, order flow and key levels and all of that. Most times, people don't get to know which of the key levels to trade or to avoid, and then your entries and probably your exits. Right. So today I'm going to show you some few things that you can pretty much be aware of. All right, before you begin to begin to trade. All right, let me throw this out to everybody. Do you have any particular pair that you want us to look at? Anyone you want us to look at? I don't want to just and pick anything to say, oh, okay, because this one is ready. Like I said, it depends on what you want to trade. Doesn't matter. For me, I have things that I trade all the time. It's not because they work a lot in terms of the strategy, but strategy works on everything, but you just need to understand that particular pair, all right, or the asset class, or as the case may be. All right, but if you want to mention one, then fine. If not, I will just pretty much just go on one of them. So let's say, for example, I go to gold, for example. But if you have anyone, just let me know. Either you paste it in a group, in a chat, or you unmute your microphone and then I can hear you. All right. Okay. So now let's begin. Now, before you trade or before you start to look for trades, what you should do is you want to know what direction the market is looking at, or what do I mean by that? Okay, you want to squeeze up your chart a little bit, and you basically want to know what the direction of the market is, something like that. All right. And then you want to begin to say, okay, are we in, what some people call discount zone or premium zone? All of those things are all grammar, to be honest, right? But what is important is what direction are we facing? Are we bullish or we're bearish? Okay. Now, the overall market can be bullish, like it is on gold at the moment, but there will be some pullbacks, internal, structures that would, that you could pretty much sell for a bit, before you will continue buying again, because you never know. That sell that is selling might be the time that the market wants to change direction to the sell side. So that is the reason why you probably want to trade it also if it presents itself to you. Okay. Now, you already know, or if you don't, that market usually makes higher highs and higher lows. I have already marked some. If you can see my chart, you can see some blue arrows that are going up and down, up and down, up and down. So what is that? What that signifies is pretty much how the market is making higher highs and higher lows. Now, before a high can be acceptable to me, it must have SLQ. SLQ simply means structural liquidity. All right. If you want to learn more about all of this, then obviously you can reach out to me. I can show you all of that at a later stage. But obviously, this class I just want to try and mix. Try and see how I can speak to people that are, newbies, or people that are a little bit experienced, and people that are already making money. So, the room is full of mixture of people. All right. So, for the basics, we can talk about that one later. All right. However, what I'm just trying to show you here is that you can pretty much map out your direction by drawing your higher highs and higher lows. And if you don't even understand structural liquidity, it's fine. Okay. What do I mean by that? If you look at this chart now, I'm looking at the 1 hour chart of gold. You can see how much gold been coming down and then going up, and then it's now going up again and then coming down and all of that. Now, all of this going up and coming down, you can actually make money from it. But you need to understand when to either buy or sell. That is the whole point of trading, right? And that is where the the concept of order flow comes into play. All right. Now, for you to be able to have an internal structure of a market, you must have minimum of 2 higher highs and 2 higher lows. What do I mean by that? If you look at this area, I've got a high here. Okay, I think I need to slow down a bit. Okay, I've got a high here, and then the market is coming down, and then give us another higher low, and then give us a lower low. Hold on a minute, I have a connection issue there. Just hold on for me 1 second, guys.
Okay.
I'm going to connect back shortly. All right, we're back up, I believe. Once you can see my screen, please let me know. If you can see my screen, please let me know. Okay, somebody said they want to see NAS.
Yeah, it's visible. It's visible, sir.
Okay, great. All right. So you'd like to understand that what you want to see really is that you want to see 2 higher highs and higher lows in a particular direction. Okay, that is what you want to see first. Like I said, before you make any attempt to even press a buy or sell, ensure that particular asset is is convincing you that yes, it is time for you to buy or sell me, or whatever the case may be. Okay, so always find those 2 levels first. If you cannot find those 2 levels, leave that chart alone. It's as simple as that. Okay, okay, And then what you now want to do, because in my channel, on my Telegram channel, I asked a question the other day. I said, what is liquidity? Okay, for me, liquidity, as I've been taught in many quarters and my experience as well, is that liquidity is where the money is. Okay, where is this money? It is actually those two levels that we are marking. All right, remember, I said you are looking for higher highs, higher lows in two places. All right, so what that means is that if the market is going up, right, the pullback here is one place that you'll be looking to engage the market at. That's a liquidity point. Okay. Now, once the market takes out a high on the left, in this case, then you are looking to pretty much find a pullback, and then you're looking for entries. Once you see two highs and two higher lows, look for entries in that direction. Okay. Now, you wouldn't know if it's going to go a long way, or it's going to pretty much reverse on you and all of that. Okay, you would not know this. So this is the reason why you can use a tool such as Fibonacci, okay, for you to pretty much know when to get out. Okay. Let me give you an example. All right. Give me 1 second. This price, or this particular gold, is giving me at the moment a reason to buy. And what I mean by that is it's giving me two levels that I want to trade at, and then I'm now looking for my entry model. The entry model that I use all the time is SBR and RBS. Okay, SBR simply means support becomes resistance, and then RBS simply means resistance becomes support. So as simple as that. Okay. So what I'm doing is that I am just trying to say, okay, I understand that the market is currently on its way up. All right. Then I'm not looking for my, in this case, I'm going to be looking for my RBS, which is resistance that becomes support. Now, this trade that I have here is one of the trades that I took sometime last year, and one other thing that I also need you to know is that before I take any RBS or any I can call it RBS. Yeah, something must fail. A opposite candlestick formation must fail first before I begin to look for a reason to buy. Okay, let me say that again. Now, remember I mentioned SBR and RBS. Okay, if I am looking to buy, I am actively looking for my RBS, okay, which is I'm buying from support. So just think about it like that. You're trying to buy from support. But before I want to buy from support, I must first of all see that other SBR must have failed. All right. What do I mean by this? Now, this market is coming down. All right. For me to understand when it is ready for it to go the other side, then what I'm looking for is, remember, I'm looking for RBS. Okay. I want to see the last SBR that failed in that direction going down. Okay. If I look at this area, I can see the last one. The last one that failed is here. All right. Let me mark that up for you. This guy is the SBR or RB SBR, yes, SBR that failed. And I'll show you how it failed also. So you will know exactly what I'm talking about. Okay. Now, look at this red candle, right? It broke this low. All right. That is the last low that you could see on the chart. All right. This red candle broke this low. Now, until the market takes out the wicks of that two candles that formed that key level going down, that sell key level, all right, do not attempt to buy the market, even if you see a very good RBS. Okay, so always look for the one that fails, and then once that fails, then the market will now begin to give you a valid key level that you can buy from, like in this case. Do you understand, or you want me to explain that again? Okay.
Please, I have
Does anybody have
a question.
Yeah, you have a question? Yes, yeah, please do ask me.
What is the box that you draw now?
Yes.
You said which is the support become resistant. Am I correct?
No,
the balls that you draw, the balls that
there
you
are
draw.
there are two boxes here. Are you talking about the one on the bottom or the one on the top where I actually took the trade?
Bottom, the one you just draw.
Okay, the one I drew
The
on the
one you
bottom
just
here.
draw. The
All
bottom
right.
one that you just
Okay.
draw.
Yeah, that's fine. So that is my my that is my sell key level, which is what? SBR, right?
Yeah,
Your sell
that
key level is
is
SBR.
okay.
Is that correct?
Okay. I thought you said yes. You said it has to fail before you start looking for a buy, right? But
That's
then
correct, yes.
um, um, the candlestick wasn't broken to the downside with a body candle, like if
Okay.
it wasn't even if it is flush on a flush, it wasn't broken to the downside.
Of course.
So how
Okay.
did it
That is
now fail, and then we start looking for a buy?
okay, great. That's a good question. Now, what
No,
I'm trying to now. Okay. Okay, hold on. Hold on. Now, there are different types of key levels that are valid and key levels that are not valid. Okay. Now, this key level that you are looking at, it is not valid because you would not take a trade on it. But that does not mean that it's not serving a particular purpose. Okay, the purpose that this particular key level is serving is showing you signs that there is a potential turn around in the market. When you begin to see wicks at the bottom side, okay, that is the market telling you that something may be, that particular market is tired. All right. And remember, I said something. I said before you want to jump into any trade, you want the chart to convince you that you know what I want to buy. Remember, we already established that we're on a bullish trend. Okay. But before you get in, you want to ask your questions. Say, hey, I am should I pretty much put my money down now or wait, that kind of a thing. Okay, but you now want to have more evidence. You already know you are buying, but you now need more evidence to show you that okay, the market is the pullback is over, and then you want to begin to buy. That's what I'm just trying to say. So now, to answer your question, it does not really need to close with a body candle and saying, oh, that is my valid key level and my sell key level before I will, no. As long as you have a low, and the low is what? Your red candle and your green candle, some candles breaking below it, all right? That will now become your sell key level that must fail, okay? Look at this last low here. This last low here. Right now, the reason why I'm not taking this one is because there is no red candle that breached the low. So when I'm saying a low now, I'm talking about the close price, okay? Not the wicks, but the candle, the body candle itself. All right, let me put a line there so you're able to understand what I'm trying to say. Here, This line is what I'm talking about. Once you have a break of it, that low, then that is your sell key level. All right. Then you now want some sort of significant movement that will close above the wicks of that particular key level. Once you see that, okay, it's showing you reasons to say, okay, maybe it's now time to buy. Now, I am not entering in all of this area because he has not given me any valid key levels for me to buy from until the market gave me this guy. One, it is fresh. Two, it is valid. Three, I am drawing my engagement zone, my easy box into it, all right? And then this is my engagement zone here, all right? And then my entry, which is what I want to also talk about tonight, is 50% area of that key level. All right. Now, this 50% that I'm talking about, sometimes you may miss it. Even once you have gone through all of these criteria that I mentioned, okay, the market may come, give you a, do the key level, tap onto it at the top of it, and then begin to go. Don't worry about it. Right? It can happen. That's what I personally call missed trade. Okay, that I've missed a trade. But what I like to trade is when it comes down to the 50% level of that buy key level. Okay. Then what I do is I will draw out my Fibonacci that only has a few information. Okay. What do I mean by that? I'm starting from here, from the bottom part here, from that wick, taking it to the level here, to that top of that key level. Okay. So let me just draw this over like this. All right. So this is my POI and my entry and exit tool. Okay. Now, once the market comes into my 50%, I'm not saying I'm buying immediately. I'm also looking for, going to my 5-minute charts or anything like that for me to look for, what's that thing called? There are two ways. There are two things that I do anyway. Okay. However, what the most important thing here in this session is that this area, right, from this level, this green area now, let me take off this one. Anything below it is where I want to begin to look for my trade. Anything here. Okay. Once the market drops into it, then I want to begin to look for my trade here. My entries, I already know what my trade is. I already have my buyers that I'm buying, and then I'll now begin to look for it. And then when I'm going to come out, is just the Fibonacci extension of 1.618. Okay, as you can see, the market came in there and then just went to its trade up here. So let me take off this guy so it will not confuse us in any way. Okay, so once the market comes to your 50%, you're taking your trade in here, boom, 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 you're getting out at this level. That's it. Okay, then once that happens, you are going to be waiting again for another pullback or another potential fail of a sell key level before you begin to buy again. All right. Now, where's the last low that happened? Okay, I have a low. There's a low. Okay, this is a low here. Okay, so we have some red candles that are close below it, and I must wait until the market takes out this high here before I'll begin to look for my buys again. Now, in this case, it did not work out because there's no, my entry criteria was not met here. So I'm not interested in this one. Okay. of course, the market tapped into this high, and then began to go up. Okay, that is not me. Okay, I'm not going to be taking that one. All right, and then remember, you're still tracking your IDMs and your induced, and your disruptions and all of that. Okay, don't forget that those ones are still there. Don't get sucked into the market to say, okay, well, I know I'm buying. Okay, because the market can obviously want to also, retrace or come down or whatever the case may be. All right. So now let me show you another entry that we may have around here. Okay. Remember, what's the rule number one is I'm looking for a failed sell key level first. Then I'll now look for a buy one straight after. Okay. So where is a failed key level around here? When the market came down, this is this is a key level right here. Okay. This guy closed below it. So the top of it, which is here, this line, once the market closes above it, then I'm looking for my next key level that is around that, that break of, of that failed thing for me. And that is exactly what has happened here. I had a key level here, a valid, what's it called, LBS. So I'm going to be drawing my Fibonacci here as well, from here to there. Okay. Okay, hold on. There we go. So then you can see how the market came into that 50% area, and then it is in this place that I'm looking for my candlestick formation on the lower time frames for me to get into the act. And so as soon as you get in, you can see how the market just went straight up, came into my take profit, and I'm done. All right. And then you're waiting again. Okay, what is happening? All right. So pretty much, if I want to simplify what I've just said to you, right? Anytime you see a key level that you are interested in, okay, anytime you see a key level that you're interested in, the first thing that will come to your mind is as a what's it called? A sell key level. Let's say if you are buying, okay, let me give you an example. Look at this key level now. All right, it's a valid one. It's a fresh, key level to buy from, right? Then before I will buy this one, I am looking down just a little bit around it to say, okay, do we have a failed sell key level? Yes, we have one here. All right, and this is it here. Let me show the box here. This is the failed key level here, right there. All right, that's the failed key level. This is the candle, all right, that invalidated that sell key level. So then after that, then it now gave me a buy key level. Then here, I will be taking that one. So I'm using the same strategy again. I'm saying, okay, let me draw my feeds from here to there. All right, from here to here. And then once the price comes into the 50%, I am getting into the market, and then I'm buying it all the way, preferably to my what's it called, to my target, which is here, right? But in this case, the market did not get there. But guess what? Where the market turned around, it turned around at another key level or resistance key level here. Remember what I used to tell you guys? Once you are in a buy, look for the next key level, right? And that is exactly what the market did here. Just bought here and then reversed here, and then the market, began to come down. All right. Now, this setup that happened here would have been the other type of key level, which is called the Quasimodo key level. right? I'll show you that now. Almost, I think it almost. Just had a break there again. All right, guys. Sorry about that break in transmission. So I'm back now. All right. So now, then the Quasimodo, what's it called? Setup now happened here. Now, I'm not sure if you guys know about Quasimodo already, but let me try and show you what that means. Now, anytime the market is going up and up and up and up like this, all right, and then failed to take out the last high, okay, if there is any significant break down to break the lows, all right, you are looking at the next high or shoulder high on the left hand side. So here is the Quasimodo level here, this place. So as soon as the market broke this level, which is the last high that you see, all right, as a shoulder, Quasimodo is like they call it the hunchback or something like that, whatever they call it. So it looks like somebody that has an hunchback. Okay. So once the market breaks below it, it's going to come back to that high here and then drop. That is usually what happens. And I'll show you, this is exactly what happened on, is it Friday last week or Thursday on gold? Let me just go back. Let me go to it and I can show you what I'm talking about. The gold was buying a lot for a very long time. See? Here. Okay. Gold was buying. So this is the last high right here. If I should draw that same level, that last high, all right, you can see as the market dropped below that place, it went back into it, and then boom, just dropped. All right, so that is Quasimodo. So now, obviously, it takes a while for you to see these things, in the live market and all of that. I'm not saying that, from tonight you begin to see it. No, but practice. If you practice, then it make you better. Okay. Once you spend a whole lot of time on the chart, you begin to see all of these things. All right. Now, do anybody have any questions? So far, we're gonna probably end this session in the next 5 minutes anyway, and then we can catch up another time. But I just wanted to pretty much give you an idea of what you should be looking at, what you should be focusing your attention on, and then I'll show you probably a more simpler way to do all of these things, because one of the things that people are finding difficult that I know about, or maybe you guys may be different because you guys here are all making money, is that people do not really understand the structure. They get confused. They look at the chart and say, "Hey, what's going on here? I don't even know if I should be buying or I should be selling." How can you quickly make decisions? So those are the kind of things, because all these higher highs and higher lows, sometimes it gets overwhelming for some. All right. Some people enjoy it. Oh, I can see high, high, low. Some people like, listen, man, is there any simpler way for me to understand these higher highs and higher lows and what I should be looking out for and all of that? Okay. So that is where I am going. I'll show you something real quick, and then we'll call it a day. So, but before I move on, do anybody have any questions so far? Please, how do you mark the structure? Okay. Josie is saying, how do I mark structure? Yeah, question?
I will answer the question first.
I didn't quite catch what you said. You wait for what?
You answer the question, the first question, then I'll ask my
Okay, yeah. So, Josie is asking how do I mark structure? Well, marking of structure is pretty much looking for two things. Number one, is the market actually taking out a high or a low? Let's use this gold, for example. There are two criteria that you look at when you are trying to mark your structures or your internals or whatever, okay? You want to see that the market is going up, right? It's coming down, and then this last print, okay, was the last high, okay? Did the market now take it out? What I mean is, did it go past it? So that is pretty much how you mark the structure. But if you're now saying that, okay, why did I choose this low and then this high, is because there's something that we call SLQ, which is called structural liquidity, which means that once the market is doing is pullback to give me the last bit and then going higher, if I should split that into two like this, okay? If I should split that V, it's like a V section, okay? If I should split that part, this part and this part into two, on his way up, before he took out this high, okay? Before he took out this high, let me find a line there. Give me one sec. Do I have it? Just frozen up again. All right. All right. Before, please, can you mark your place? The quasi level you explained is a bit confusing for me. Okay. Quasimodo is confusing. Please, I didn't get the part you said that is sell inverse for fail for before looking for explain with chart. Okay. All right. I'll try and answer some of the questions as fast as I can. Because I thought this class will only be an hour, and now it's already an hour, and it's now even all frozen up. Okay, I am back again. All right. So what I'm saying is, if you want to draw the structure, so I'm trying to answer Josie's question to say, how do I mark my structure? Okay. So now I'm looking for when it would rally, come back down, and then rally again. So I'm now saying, okay, how do I know that this is going to be my lower low? Obviously, it is very obvious that the market is coming down, but why this level? I'm splitting that, the moment that the market took out this high, I'm splitting it into two, right? And then if I can see a red candle that formed in the midst of the green candles, because when it is green, we're expecting green, 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 green only. But if you can find red on that side of the market, then this is a valid break of structure. So red, make sure you find but when it went up, there was no what was the last one I saw? One like okay, look at this one. The market, this is the highest at this time, all right? And then the market pulled back, all right? So let's say this is the V. All right, let's say this is the V that I'm talking about from here to there, right? Now, if you should break this guy into two, like this, if you break into two, once the market is going up and up and up and up, do you see any red candle there at all before this break? Okay, look at this green candle that broke it. there is no red candle at all. So this is not a valid SLQ. All right, it is not going to qualify. So I hope that answers your question, Josie, on how I mark my my structure. So I'm looking for this, this V shape twice in a particular direction, and then I'm trying to make my trade in that direction. All right. So I hope that helps. Okay. So the next one is Quasimodo. Please, I didn't get your part. You said that it's cell universe. Okay, that's the same question. Yes, thanks. Okay, fantastic. All right. So Quasimodo is a little bit complex, but it's also simple. All right. Now let me show you what I mean by Quasimodo. Okay. Let me probably draw a chart. Okay. Let's imagine that I have a line like this, and then the market is coming up, coming down. It's very similar to what we call head and shoulders. Very similar. Okay, but you have to pretty much look at it in a different way. All right. Quasimodo probably will look something like this. All right. Now, the market went up, took out this low, and then when it was coming down, there was a high that was here. Okay, so the market will now come back to it. I don't know if you guys know anything about head and shoulders. Like I said, it's quite, looks similar to head and shoulders a lot. All right, but this one you're now looking at key level. Okay, all right, key level on the left hand side. So once the market comes back into it, it will drop, which is what happened here last week, Thursday. All right, on gold. Okay, let me show you the line here. Let me take off this one. Okay, so this is the high that I was talking about. Okay, so the market took it out and came back into it, that high. And you see it? So that is Quasimodo that's the way I can explain it. Okay, it can also happen when you're trying to buy as well. Okay, this is obviously selling. Okay, if it's selling, you will see it also when the market makes like a W sign. Okay, and then it will come back to that level or that key level on the left hand side before it will take off there. So there was a trade set up here for people that know how to trade Quasimodo anyway for gold. Because remember, everybody was just buying gold, buy. And then all of a sudden, boom, the thing turned around.
It was a sniper.
So, but when it turned around, it was just the Quasimodo entry to sell it. And now, if you look at this, I did mention your two levels. So my last two levels is this guy, which is my inducement, and then this guy here, which is my disruption. So right now, price has taken out disruption on the 1 hour chart on gold. Okay, so what should we be expecting next week? We should be expecting weakness, right? But hey, don't be too hasty to feel that is what is going to happen, because the market can actually reclaim this disruption. Okay, reclamation simply mean, okay, let me just tell you what reclamation simply mean. It means that how can I put this? Okay, reclamation did not happen here. Okay, let me tell you what reclamation is. See, when you are trading, what you want to see happen, I don't even know why I'm talking about reclamation now, but I'm just felt led to talk about it a little bit, is that you see those two levels that we are drawing, okay, those higher highs and higher lows, those two levels, that's level 1 here and level 2 here. That is where we expect market to react for either a buy or a continued sell. Okay, we expect that. And here also, we are either expecting a buy or a continued sell. All right. Now, but in the situation whereby it took it out, yes, it has closed below it. Then when I'm expecting a buy, I will not buy straight away. I want it to come back and test it. Once you have tested it again and then gives me a reason to buy here, like what's it called? Key level RBS, then I begin to buy that one. Not this RBS. This RBS will fail. Okay, not this one. It is when it comes back into it and then is now reclaiming that level by not breaking it, then no problem. But look at this guy, it broke it. If the market should do this next week now, like this, then I can buy. Okay, so this is reclamation. All right, so let it take it out, that's fine. Now that they're taking it out, my bias is, oh, I want to sell, I want to sell, I want to sell, right? But wait, remember, you want to see a sell key level fail first before you want to see a buy key level fail first. If you are selling, if you are looking to sell, you want to see a buy key level fail first, and then you now want to sell. Okay, always look for the opposite key level before you take the one you want to take. Do you understand? I hope that answers the Quasimodo question, and then I spoke about reclamation a bit also. And then somebody said, I didn't get the part you said, the sell inverse should fail first. Okay, all right. Now, let me explain that. Before me, personally, I enter any market, I want to understand one thing first. What is my, what's that thing called? What is my my directional bias? Okay, if my directional bias is bias, like in this gold, for example, when we were in this area, okay, where we were in this area, let me put it that way. All right, let me find a good example that will not confuse you guys. Let's see. 1 second. Okay, let me use this example, all right, for teaching purposes only. All right, now I have established that I am in a, this market just took out, a disruption. The gold line is usually my disruption level, okay? Took out the disruption, and then I am looking actively for buys, all right? But before I buy, I want to see a sell key level fail. Now, what is a sell key level is what you want to ask yourself. Sell key level, you must have a red candle, this red candle, you must have a green candle, okay? So that low, this here, this place, is what I want the market to take out first with any red candle, okay? Like, you look at this small red candle now, it took it out this low, okay? So that is a sell key level at that moment in time, right? Now, if I now find a candle that breaks, or a series of candle that now breaks the high of that particular two candles that made that sell key level, which is this guy here. I'm just talking to you how I find my A+ setups, okay? All right. So once I find any candle or any series of candles that takes out the high of that two candles, this is the two candles that is forming that my key level here. These two candles is the one that is forming that my key level. It's just a low, right? Low is red and green, and high is green and red. Simple. Okay. So red and green, I've got red candles that broke it. Is the low, not the weak and all of that. No, I'm not worried about the week. It's the body that I'm looking out for when it's breaking the, and then it's weak. Once this is happening, it's showing me weakness that, hey, we are no longer going down. It's as simple as that. Okay. It's just showing weakness that we are no longer going down. Then there's a probability that we may buy. Okay. That is what that means. So I want that one to fail. So once it fails with this candle, then I am actively looking for what's it called? A key level to buy from. And guess what? It is here, right? That key level is here, this one. This key level here. All right. This is the green candle that broke this high, and is 50%. All right, 50% of that level is here. If I move it down here, you can see what I mean. Okay, if I use my Fibo on that box, all right, to give me this guy, this is the two guys, okay? All right, so you can see that the market came back into that 50% with this week, and then went straight to take profit, because my take profit is extension 1.618 on Fibs. Okay, so that is a trade there. So imagine if you are able to have some good lot size or whatever in there. Boom, that's all. You just want to take a trade and win, finish. Don't worry about having to go 1,000 pips. Nah, don't worry yourself about that. Okay, take your 1% there, 2% there. It will all add up. I hope that explains how you can see a failed RBS or not. Now, there was a trade that, let me show you. There was a trade that I saw recently. I think Go Wide also traded that one. I think it's Japan something, Japan 225 or whatever. Let me see. I don't know if anybody trades that pair also. It's quite nice, 225. Do I have it here? Or is it under stock? Okay, it's right here. All right, let me show you. I've even never ever opened this one before. I don't think I've opened it on this PC before, so that's why it's acting up. Let me go to daily charts. So it is loading up. Okay, so that's why it's loading up. All right. So now, guess what, guys? Let me now show you something that I use. All right, for me to understand the what's that thing called? To understand market direction at every point in time. Okay, that I'll just look at it and I'll know exactly where the market is going. Now, what I'm about to show you, I am not sharing his details yet. Okay, so don't say to me, hey, what's that? Use to me, but at some point, yes, I will. Okay, but I'll show you how that works. Okay. Now, let's see. Now, remember, people always get confused about, are we in a buys or are we in a sells? Okay. A lot of people get that confused. So I use is a particular indicator that will tell me, anytime price is above it. Look at this gray line that you see here. Okay. This gray line, right? Anytime price is above it, okay, I am looking to buy. So I'm looking for my buy key levels, all of those things that I'm talking about. And anytime price is below it, I'm looking to sell. Simple. So now, what this means is that I don't really need to be worried about what is my structure right now. And guess what, right? I told you that this orange line is my disruption. Come and see where this guy is also at. You see this guy is also at the same disruption area. Sometimes it can be the same like this, or it will even be earlier. You know, it will call it earlier, so to speak. All right. So it can happen like that. You know, when it calls out your structure. So this type of indicator can help you to pretty much split the market into two. That's one. And then to pretty much simplify the direction of the market for you. All right. Now, let me show you what I mean. Now, you know, I told you that anytime the market is above it, you look to buy. Now, I want you to just look at something really interesting and see how the market reacts to that line. It does more than what I've just said, but that's just the basic, okay? So look at it. Anytime, okay, the market will rise above it, it would, and remember, I told you that this gold line is my disruption. Now, imagine if you know that the market has gone above this gray line, you can begin to look for your buys from here. Buys, even before it took out the disruption. And then you're just buying. So you are in the buys before it actually takes out your disruption. All right. And then in the situation where buy is lower like this, look at what the market is doing. It broke below it, went to test it, and then boom, sold off. Okay. Look at this. See how price is dancing on this guy. Once it touches it, you begin to look for your trades. That's why you're seeing all these trades that I took here. Okay, seeing all these trades that I took here. Okay, so once it bounces on it, you are looking for your RBS to buy from. Remember, look for a failed key level first, then look for the buy. Okay, that will give you more confidence in your trade setups. And then when the market is now, when that line is now going sideways like this, what does that tell you? It means that the market is sideways. You should stay away from it. So this indicator is telling you when the market is trending and when to also potentially stay away from the market. So once you begin to get your losses around here, then you know that the market is on sideways. It's not pretty much. So it shows me anyway personally that look at this guy as well. Look at how accurate it is by breaking at the same what's that thing called? Disruption, okay, for it to begin to sell. You know what? I said I was not going to show you guys the details. Let me actually show you. Okay, it's not. I'm a guy that usually would share information, even though I reserve it for my inner paid students. But I will not give you everything that it does, but I'll just show you what it is. Okay. This line that you are looking at is simply a moving average, okay? Exponential moving average, all right? If you know what a moving average is, then you probably understand what I'm trying to say. Okay, somebody has raised up their hand. Who's that? You have any question? If you have any question here, you can go ahead and ask me. How do I even get into the chat now? Chat. Did you raise up your hand or not? No? Okay. Nobody. All right. Okay, so it's pretty much exponential moving average, okay? So what it does for me is to show me the, what I should be looking out for in terms of buying and selling. Anytime the price is below it, I am looking to sell. Anytime the price is above it, I am looking to buy. Simple. All right, guys. So I am not stressing myself about, knowing how to draw structure and, looking for SL kills, all of that. All of that is good. It's good, it's good for the gallery, It makes you look, like a serious trader, when you are drawing structure, you're saying, oh, this is higher highs, higher lows. I'm not knocking it. Don't get me wrong. But I like when I find easier way to do things, and then I can, uh, pretty much um, what's the word? Pretty much uh, get by with my life. So if I go into NAS, because I know there's a NAS trader in here, is doing the same thing for me. Okay, look at this. Look at this. All right. If I'm looking at this, if I open up the chart and then I'm seeing this guy is relatively flat. Okay, as it is relatively flat, it is touching it and then giving me a reason to buy. Okay, touching it, giving me to buy. Now, once it has broken away from it, and then the market now begins to, as in the indicator now begins to to go slanty, which means it's pointing down, then I will begin to buy. Sell, and then if it's now pointing up when the market is above it, I'm looking to buy. You can see how the market is just caressing this guy. Okay, it just bounces up on it and boom. So what I'm saying in essence is that do not stress yourself about structures, about where the market, whether we are making high highs and high lows and all of that. All you do is just wait until the market goes above this line, right? Okay. Now, once you come, into my classes, in inner classes, then I can show you other things that you should be, be aware of as well. It's not just about, oh, it's above it and I'm looking for buy. Okay, you may not get it right. There's some other things that you should also, just like when I mentioned the key level thing for you tonight, to say before you take a buy key level, ensure that the sell key level fails first. Something like that. So there are some things that you should look at before you begin to take your trades. Look at this euro dollar, for example. The market went above it, came back into it. Okay. For me, this is what I call liquidity. All right. Market came back into it, tested it, did not break it. It will probably give me a buy key level here because it failed. Let me even go in there. Let's see. Let's see if we can find a trade in there actually. So I can show you what I'm talking about. Okay. All right. So this is the last key level that formed. Okay. Sell key level that formed. Now, as soon as this guy takes it out, then I'm free to buy. Okay. I'm free to buy. So in here, I can begin to buy my opening prices, begin to use any entry module that I want, and all of that. So you can find your entries once you are above this guy. That's what I'm just trying to say. All right. Once you are above it, you can begin to buy. And once, okay, for me, before I can get into this euro dollar again, I need the market to bounce off it again. Okay. And the market is doing that now. Okay. I want to see what will happen here next week. If it would hold it, or it will break below it and then retest it, and then we begin to sell again. Simple. Okay. If I go to pound dollar, you would see the same thing. Okay. Once the market is above it, I am looking to buy. If the market is below it, I am looking to sell. All right. Let's go to BTC. BTC is so sweet. Look at this guy. This is the line I'm talking about. It went up, 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 up. It broke here. Once it breaks, I'll find my entries here. Okay. Look at that. Okay. This is like classic reclamation. Went up. Okay. Went up and then sold. And then up to now is going down. So as long as the price is below this guy, I'm looking for my key level sells. I hope this makes sense and it's not confusing anybody. Let's go to US oil, for example. See, market is bouncing on it. Once it bounces on it, I'm potentially looking for my buy key level. So even if you lose, so this is what I wanted to say, that even if you lose an entry, you are rest assured that you would find another one for you to make back your money. Okay, so don't say, oh, because this key level failed here. Oh, now, okay, I don't want US oil. The US oil is not working. Let me go to BTC and then try. No, don't do that, guys. Stick to one, maximum two asset class. Okay, look at it like your relationship with your wife or your girlfriend or whatever, just one person that you want to focus on that person, and you will be profitable. Having to go all around the place does not make any sense, guys. Does not make any sense. Okay, I'll show you the same information on my favorite pair. What's that thing called again? My favorite deriv pair. Okay, same old thing. Let me see. I'm trying to search for it now. Okay. Can you guys see my chat? Everybody's so quiet. What's going on? Nobody's talking to me.
Yeah, the chat is visible.
Lord. I'm sure obviously because you're seeing this for the first time, you're thinking, what's this guy doing, man? What's this? Why would trading be this easy? Is easy still in the room or is gone? All right. So look at this V25 also, right? The market, this blue line is that same exponential moving average that I mentioned to you. Okay. Anytime the market touches it, that is below it, I mean, you can begin to look for your sell trades. Okay. If it's below it, begin to look for your sell trades. When it's above it, see, this is why I mark this one buy only. Okay. Once it has crossed over, man, I know I'm in a buy zone. Okay, so up here is my buy zone, down here is my sell zone. It's as simple as that. You can see how the market is going up, coming back to it, and then taking off again. All right, and then this is what is now happening right now, is coming towards that line again. Okay, does this mean it wants to bounce off it, or it wants to drop and then begin to drop again? Because remember, I'm still also still tracking my IDMs and disruption and all of that, but I just found a easier way for people who are not technically sound or are not getting the concept of having to mark their disruption and their IDMs. Come on, you can use something like this. It's exponentially, exponential moving average indicator that can pretty much show you that, okay, just look for your buys. When it's below it, look for your sells. It's as simple as that. So let's try more other asset classes before we go. Okay, let's start from USD CAD. Let's see what is going on. Look at that. Look at that, guys. Look at that. Woo! See? Came back into it. Boom, 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 boom. You're buying. Buying. See? All right. Once this is happening, wait. Okay. Wait. Let it clear. And then you begin to buy. Look at that. See? Okay. Look at when it crosses below it, then you're just beginning to look for your continuation models. It's as simple as that. Make your trading simple this year, guys. Don't stress yourself. All right, don't stress yourself. Let's look at the most craziest pairs like Euro GBP, for example. Look at that. It is master. See, once it crosses below, you're looking for your sells. Sells. Once it's below it, and anytime it crosses above it, you're looking for your buys. Okay, buys. Okay, and then once it's going sideways like this, you stay away. Okay. Euro GBP, same thing. You're looking for your buys, you're looking for your sells. All right, so focus on so now what this is just telling you, or what I'm trying to show you here, is you don't need to stress about market direction, okay? All your focus will now be how you're going to enter and how you're going to exit. Simple. I hope this makes sense. And that we can call, it a night also. Just in case you have any other questions, you can see how the market is just pretty much shorting, as soon as there's a break of that line. When it was going sideways, you don't do anything. When it is now cleared it, then you begin to look for your continuations. Simple. Until so maybe later I'll probably show you when you begin to look for buys from the sell zone, even though I don't usually do that, but you can look for it. How can you do that? Look for sell, failed sell key level, okay, and then take your buy, just like what happened on that. I'm not sure if it's going to load now. That Japan guy or Japanese guy. I'm not sure why it's not loading up here. Still not loading up. But anyway, you get the drift, right? So so that's it. So let's call it a night. And if you want to reach out to me, then obviously you know how to get me, FXP Finder on Telegram or wherever. Shoot me a message, and then we can take things a little bit further. All right, guys. Do anybody have any questions before we go?
Thank you very much, sir. Yes,
Okay,
sir.
good evening.
Okay.
Hello.
Thank you very much.
Mr. Isaiah, you're here.
Yeah,
How are
good
you,
evening.
sir? How are you?
I'm very fine.
Okay, great. Don't worry. 2026 is going to be a much, 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 much better year for all of us.
Yeah, thank you very much.
We're trying to find easiest way to do things. Okay. So go wide. Do you want to have a question before I go? I'm really tired now.
Yes, sir. Hey, thank you. Sorry for the stress. Thank you very, very much for your opportunity and the presentation. It was a nice one, and I enjoyed every bit of it. That's why I always showed up all the time. But I would love you to please. So I'm always active. I'm always active. No matter how busy I am, I still always create time. Please, sir, I would love you to please, if you could assist us in the most of the indicators, they are not set automatically by default. So is there a way that you could put us through the settings of the exponential moving average, sir? Thank you, sir.
Well, like I said, this part is what I usually would what's it called? Um, Reserve for my paid students. Okay. That's what I'll usually do. But because you guys have been my family for a while, and I might probably just share this because this particular session is on YouTube. Okay. It's actually live on YouTube right now. And it will be unfair if I am sharing this live for everybody in the world to see it. So I might probably share it within the group, okay, for now. And then obviously for my paid, remember, me just sharing the indicator, even sharing the settings doesn't mean that you would 100% know how to use it. But there's always something that I keep for my paid students also. So, but I will I'll gladly show that to you. That's no problem. Okay, so I'll send that into the group so everybody will know what the settings are and how to whatever you need to do. All right.
Thank you very much. Thank you so much. Thank you so much, sir. Thank you so much. I really appreciate that. Thank you so much.
You're welcome, and then you can share some of your money.
I'm still
Mr.
crawling, though. I'm still crawling like this. You know, you've been the person like
Mr. Goa making killing the market, saying, "Hey, come and see food. I'm not taking this trade, but you guys can eat." I was like, I like that.
yes, honestly, I see that, yeah, sticking to few pairs is actually very nice, and I've got so busy right now. So, the few pairs I stick to, I just like their price action, and it makes me disciplined. So, and moreover, I don't miss trades anyhow, and I understood the price action per time. So that's why when I saw that opportunity on that trade, I just feel like, no, indiscipline will be the thing why I should be checking out what I just find out now. Not that I really have been on the price action for a while, but the ones that have been on the price action for a while, I stick to them, and those are the consistent pairs I trade all the time.
Mhm. All right. No worries. So yes, so yeah, well, I'm even looking at this Solana, and I look at that. Look, as soon as the market crossed over, boom, it's just going. And I don't even have any IDMs or whatever on my chart. I don't need it. See? Okay. But it's good for you to know your IDMs and destruction. Don't get me wrong. Don't get me wrong, it's good. However, look at that. Market just came, tapped into it, and is on his way. You know? Okay, it's going sideways, going flat. Whenever it's going flat like this, you stay away from it. Okay, you don't use it. Okay, look at that. Tapped, tapped, tapped. Look at this tap right here. Ooh, look at that. Just tapping and going away. Tapping, going away. All right. Anyway, what do I know? All right, guys. So let's call it a day. God bless you all, and I pray and hope that everybody, keeps on winning, and then we can all be profitable and pass on the knowledge. As simple as that. All right, guys. Have a good night. Speak to you soon.
Good night.
All right. Night, sir.
Good night. Good night. Good night. Okay. Chat.